All right, traders, been getting a lot of feedback on the deep in the money call options video that I made last time. And again, a lot of people asking me, Lee, can we use that same deep in the money strategy with put options? Can we buy deep in the money put options? And the answer is absolutely you can. A lot of people think the market's at a high, the market's about ready to crash and come down. So they want to know how to take bearish positions and really make a lot of money off of them. Now, if you're bearish, we're going to look at a specific trade today, exactly like we did with the deep in the money call option. I'm going to show you some real numbers with a real trade that you can do. If you're extremely bearish on a particular stock, you can buy deep in the money put options. So if you're thinking that the market's topping out and you want to get short the market, sit back and watch this video. All right, let's just get cracking here. All right, everyone, Lee Lowell here from smartoptionseller.com. So today we're talking about buying deep in the money put options because you're extremely bearish on the market. And in order to do that, I'm going to go over the cheat sheet again because we have the cheat sheet. Let's just talk about, some of the items here, and then we'll look at a real example. So buying deep in the money put options. If you are very bearish, you can buy a deep in the money put option. And what I consider deep in the money is a strike, an option strike that has at least a 90 delta. Let me take a step back here and explain this a little bit more. All options have a delta, and deltas range from 0 to 100. And the higher the delta, the more responsive the option price is to movement in the stock. So my thing that I always like to teach my students is that when you buy an option, don't you want that option to move when the stock does? A lot of people coming in, especially new option traders, think, well, I'll just buy any option, and as long as the stock goes in my direction, I'll make money on it. And that's not always true because it'll depend on how volatile the stock is, how much time is left to expiration. So the delta gives you an idea of how responsive the option price will be in accordance to how the stock moves. And not options are created equal. Options with higher delta are going to move a lot faster than options with a low delta. And these low delta options are very cheap, dollar-wise. So people like to gravitate towards the cheap options because it doesn't cost that much. But they don't realize that even if the stock moves in their favor, that option might not move all that much. So they get very disappointed and they're like, well, the stock went the way I predicted. How come my option didn't make any money? It's because they bought low delta options. So the choice is completely up to you. But if you want an option to move when the stock does, you want to play with a higher strike, a higher delta. And I'll show you the option calculator, and I'll show you some of the numbers to prove that that's how it works. Okay. So going through the list here, if you're very bearish, you're going to want to pick a strike with at least a 90 delta. And you're going to have to choose an expiration date that sort of matches your time frame in which you think the stock's going to make the move. Most people underestimate the amount of time it takes for stock to move where it's supposed to go. And they end up buying more shorter term options in an expiration length. And those shorter term options starts to wither away and die, something called theta. And I'll show you that in the option chain as well. If the stock doesn't move in the intended time, your investment is going to be lost. You're going to lose 100% of that investment because the stock just didn't make the move in the amount of time you thought it would. So it's probably better that you give yourself more time, meaning go further out in expiration. Yes, those options will cost more, but you'll give the stock more time to make the intended move. All right. So know your break-even level. Here, I'm down here. Whenever you buy an option, you always want to know where the stock has to go to at least break even on the trade. Very easy to figure out. You always subtract the option price from the strike price, and I'll show you how to do that in this example. And check the probability. What are the chances of the stock moving from point A, its starting point, to point B to where you need it to in order to make money? You always should know your probability before stepping into a trade. A lot of people don't understand that. And when they actually see the probability, and most of the time, those probabilities are very low for them to succeed. They're like, wow, maybe I don't really want to do that trade. So we'll check the probability. And lastly, take profits. You don't have to hold the option all the way to expiration. If the stock moves in your favor very quickly, you can take the money and run. I know a lot of people like to hold the option all the way to expiration because they paid for it. Might as well hold it all the way until the end. But in the stock and options market, profits can be fleeting. They can be there one day and gone the next. And you'll be kicking yourself for not taking at least some of the gains, especially if you trade more than one option contract. If you trade at least 2 contracts, you can take some money off the table and then you'll be playing with the house's money. But if you only have enough money to buy one option contract, then you need to decide, if I'm making money, how much is a profit? What amount of profit is good for me? Is that a 20% profit, 50% profit? You have to decide ahead of time. Don't think that you have to hold it all the way to expiration. Okay, so that's our little cheat sheet here. Let's go into the option chain and actually let's bring up the stock chart first. Now I want to mention that this is an example only. I got a lot of people sending me messages, comments in YouTube about the Deep in the Money call video I made. I used Cisco as an example of the stock, and they were asking me, why do you think Cisco is going to move in the way that you think it's going to move? And I have to keep explaining it was just purely an example. This is not a real trade, so I just want to make sure everybody understands that up front. So the stock we're going to look at today is AMD, Advanced Micro Devices, and let's just assume you're bearish because look at this chart. It had this gap up. It's trading right at the highs, overbought on the RSI indicator down here. You're thinking, this thing's got to fall. I am bearish on AMD. And once again, this is an example. This is not a prediction by me in any way, shape, or form. This is just me making the assumption that you, the viewer, are bearish on AMD and you think this thing's going to drop. What is the way to play a bearish scenario here with options? Okay, so AMD is trading around $238.60. You think it's going to drop. You just think it's going to drop. You're not really sure where, but it's going to drop. So how do you choose an option in this case? So the next thing we want to do is go into the option chain. Okay, so this is an option chain for AMD, obviously. And here's the tab up here. Call options on the left, put options on the right in case you're not familiar with an option chain. Now we're going to go out to January. Okay, January 2026, here's the expiration date, 93 days in the future. So you got about 3 months time. Once again, I'm just using this as an example. You can choose any expiration date you choose. And then, as we said, we want to choose a 90 delta option, a put option, that the way that you do that, you go down the strike column here, and as long as you have in your option chain the delta column is very important because if you're going to buy a 90 delta option, you need to know what the deltas are. So make sure the delta column is in here. So we got the delta column. We look for the closest 90 delta option. As I said, deltas range from 0 to 100%. These are percentage numbers. So you can see right here, this is a 90.6 delta, and it's got a negative sign in front of it because put options are bearish. They just have a negative sign in front of it. If you look at the delta on the call option side, it's positive. It doesn't really mean anything. This has got a 90 delta, and you scan over. The 370 puts is what you're looking to buy, okay, because that is a 90 delta. And what the delta tells you is for every dollar that AMD drops, this put option value should go up about 90 cents per contract or $90. Okay, so it's tracking it about 90% of the time. If you choose an at-the-money strike, those are typically a 50% delta. And I'm going to go into the discussion here. People will say, well, these at-the-money options, let's say that's probably, here's the last price of AMD around 230, and on the chart it was 238 and change. So the 240 strike is what's considered the most at-the-money option, and those deltas are roughly closer to 50%. So people will say to me, well, why don't I just buy, a couple at-the-money strikes versus buying this really expensive deep in the money strike? And I'll go over that as well because those are some of the questions that came up. So let's just focus on this deep in the money strike right here, this 370 put. It's got a 90.6 delta, and we want to take a price in the middle of the bid-ask spread. So we're looking at roughly 133.30, okay? 133.3 is the price of the option that we're looking to buy it for. And that will cost you $13,330, Okay, that's the cost to buy this thing, $13,330. And as I said, and on the cheat sheet, you want to know what your break-even level is, because just because you buy this strike, you need to know where you're actually going to be getting bearish from. Okay, if AMD is around $238 and change, if you shorted the stock, which is and has unlimited loss potential, I would never tell anyone to short shares of stock, because if AMD goes up, you're going to be in a world of hurt. You have unlimited upside loss potential. When you buy an option, the most you can lose is whatever you paid for the option. So there is no unlimited risk. So if AMD does go up, the most you can lose by buying this thing is your $13,330. Now, in order to find the break even, where you would actually get short the market is, I said, you got to take the option price and subtract it from the strike price. So I'm just getting my calculator here. So the strike is 370 minus 133.3 is $236.70. So if you bought this put option for 133.3 per contract, your break even would be $236.70, which is a little bit lower than where AMD currently trades right now. So if you actually shorted the shares of stock, you would short them at this price, but you're buying this put option, so your break even is a little bit lower than where the current price of the stock is, $236.70. If we go back to the chart here, $236.70 is like, right, I'm looking at my legend here. So right around here is $236.70. It would be extremely easy for AMD to drop. It's actually about $1.90 lower than where it closed today. Look at the range here. I mean, this traded in almost a $20 range. It would probably be very easy for AMD to drop $1.90 from its current closing price. It's already doing that in the aftermarket in the option chain here. This is the after hours price, so it's already dropping. Okay, so you think about it, all AMD has to drop is less than $2 from where it closed, and you're in the money. You're making money. Okay, so that's what the deep in the money options can do for you. It doesn't take the stock. The stock doesn't have to go very far before you're already breaking even. Okay, that's one of the great things about buying a deep in the money option. That's your break even. Now, let's address well, what if I bought, a couple at the money strikes? It'll cost me less, or I can buy just the same amount, $13,000 worth, and I'll be able to buy a lot more contracts. Okay, so let's address this right now. Let's assume, we want to buy the 240 put, which is the closest at the money strike, and those things are worth $27.45 per contract, and that's $2,745. So you can buy roughly, let me see how much that would be, $2,745 times 5 contracts would be $13,725. And this one you're paying $13,330. So for a couple $100 more, you can buy five of these 240 contracts for the same dollar expenditure. Okay, so that's what people come at me with in the comments. Don't I want to buy? Because they always hear you should buy or you should trade the at the money strikes. Now the at the money, this one, the 240 put, has a 43.9% delta. Okay, so if AMD drops $1, this option price will go up about 44 cents a contract, or $44. And if you have 5 of them, it's going to go up, over $200 roughly. So again, you have to find what's your break even. So the 240 minus 27.33, your break even is $212.67. $212.67. So that has to drop about, about $26. $26. We go back to the chart. 212 is all the way down here. Okay. So in order for you just to break even, if you bought all those at the money strikes, AMD's got to fall a lot farther. 212 it has to get down to, whereas the 370 puts only has to fall to $236.70, whatever the price was. So these at the monies have to drop a lot more. Okay. that may not be a bad thing. It all depends on how far AMD falls and how fast it gets there. Nobody really knows. So the thing with buying the deep in the monies is that once AMD starts to drop, you can make money very quickly because your break even is so high. With the at the monies, the stock has to fall a lot further. You don't know how long it's going to take for the stock to drop that far. But, you never know. So you can decide what you want to do. You can buy one deep in the money or you can buy 5 at the monies. It's entirely up to you. The cost, the dollar outlay is almost the same. Now, if AMD falls really, really far, then you're going to make a lot of money with the at the monies. But you're kind of guessing, you're hoping that AMD is going to fall really far. You need it to get down to at least $212 in order to just break even. If AMD drops from 238 to 215 and just stops there, you're not going to make any money on those at the money call up puts, but you'll make some money on the deep in the money put. So we want to check the probability. That's the next thing that we want to do. Let me go to the probability calculator here. And we're going to put in some numbers and we're going to see what the chances are of AMD falling that far. So the current price, let's say 238.60, that's where it closed in the regular market. And we're going to go out to December 19th. January. That's where we're going to January, right? Is that the one we were looking at? Let me just go back to the option chain here okay, yeah, we're looking at the January. Sorry about that. Okay, so we're 3 days out, and the volatility for AMD roughly at these levels. So we'll use the at the money level, 58.5. We'll round up to 59%. We'll put that in the calculator. Okay, 59%. Get rid of this. So first we want to know, what are the chances of it getting down to $236.70, right? That's the break even for the deep in the money strike. 236.70. Okay, all we want to know is put the same number in both target boxes. And when we click on go, you can see now we want it to finish below 236.70. So the chances right here, we want to concentrate on this box and this box, finishing below the lowest target. So we want to know what the opportunity is for AMD to drop down to here. And that's about almost a 49% chance that it could drop that far in the next 93 days. Remember, it only has to drop a little bit. So there's about a 49% chance of that happening. Conversely, there's about a 51% chance that it won't fall that far and stay that far at the expiration date in 93 days from now. Okay, so you got a pretty good chance. Remember, stocks only have a 50-50 chance. When you buy stocks or sell stocks, you only have a 50-50 chance on the next tick of that stock of making any money. So buying a deep in the money put option or any deep in the money option has a very close probability to what the stock would be, and that's what you want. So let's check it for the at the money, which was 212. What was it? 212.50 or something. I don't remember the exact number. So let's just put 212.50. Hit go. So now you only have a 34.86% chance. So the probabilities are lower, because the stock has to fall a bit far. But that's all up to you. You decide what you want to do. Okay. Now, the next thing we want to do is figure out, how much money you can make if, AMD falls really far. Let's just pick some numbers here for argument's sake and see what the numbers would be. Let's go back to the chart here and take a look. So let's just see if, let's just see if AMD falls down to $180 down to here by the expiration date in January, which is, somewhere out here. This is January all the way out here. Let's see if it could fall all the way down to 180. Let's see what the numbers are, how much money you can make. So we'll use $180 as our example of where AMD gets to. Now, if you sold the shares at $238.60 and it dropped down to $180, you're going to make $58.60 per share. I'm just doing it on my calculator, taking 238.6 and subtracting 180 from it. It's $58.60 per share. So if you shorted 100 shares of stock, you'd make $5,860. Okay. Now with the deep in the money, here's how you do it. So you take your strike price, which is 370, subtract out where the stock ends up, 180. So that's a profit of $190, but you have to subtract out what you paid for the option, which was it 133.3? So your break even, you would make $56.70 per share, or $5,670. $5,670. The stock people were making about $5,800. So the deep in the money is making almost as much as shorting the shares. Now, here's where the at the monies could really pay off. We take the 240 strike, so 240 minus 180 is 60. Subtract out what you paid for it, which was, let me just make sure I got the numbers, 2745. All right. Okay. Where are we here? 2745. 60 minus 27.45. So you're making $3,200 per contract on the at the monies, but you bought 5 of those, so multiply that by 5. So you're making over $16,000. The at the monies are making over $16,000. The deep in the money is making about $5,600. So the at the monies are really paying off in this case. But that's assuming or AMD drops all the way down to 180. Are you willing to take on that bet and just hope that it gets there? Okay, nobody knows where AMD is going to end up. But the key with buying deep in the monies is that, number one, your break even is really high versus the at the monies where your break even's down here. With the deep in the monies, you got a much higher probability of making that money or the stock getting to your break even versus the at the monies where the break even's lower. So it all comes down to how bearish are you? I mean, if you're super, super bearish and you really know the thing's going to go hard down, then maybe you buy the at the monies. Okay, I'm not saying one way is better than the other. In my opinion, I default to buying a deep in the money high delta because I know the break even is very small and I know there's a higher chance of the stock making the move that I need. Buying the at the money is a little bit more of a prediction on your part because you need the stock to move a much further distance. So I'm not saying one's right or wrong. I'm just saying those are the odds and the probabilities. Okay. If AMD only drops down to $212.60 by January, those at the monies aren't going to make anything, but the deep in the money will. So it all depends on how far the stock's going to move. All right. So the whole reason that I made this video is because people want to know, can you buy deep in the money put options the same way you can buy deep in the money call options if you're expecting a big move, or if you want to track the stock movement? The deep in the monies with the high deltas act almost like the stock will. Okay, that's the thing that you want. As I said earlier on, when you buy an option, you want that option price to move. Okay, a high delta will guarantee that the option price will move. Now we can open up the option calculator. Let me go up to bar chart. Okay, this is barchart.com, free options calculator. You can get that here. So I already typed in the symbol. So let's just take a look here. We're looking at, and I'll show you how the calculator works. We're looking at January 2026, 93 days, just like we thought. $138.60. That's where it closed on that day. And we're going to look at, as I said, we're going to look at the 370 strike put, and let's make sure that the numbers match up, the cost matches up. We want to use the put. Sorry about that. That's why the numbers didn't look right. Okay. So let's change this, the strike price. And all these numbers default in. When you type in the symbol up here, all these inputs will default in, and it'll pump out the theoreticals, and the deltas are here. So we're using $238.60. The strike price is $370. We're using the put, and it's giving a theoretical value of $130.75. We had the value of that put $133 roughly. So it's a couple dollars difference, but you can still see it costs a lot of money, and the delta is about 90%, just like we showed in the option chain. Now, if we change the the strike price to the 240s, and then you'll see is the option should be worth about $27.45 roughly. So it's got the same thing. The delta's around 43 and change, exactly what we saw in the option chain. So everything's good. So let's just assume, let's take the expiration date down to 0. And if AMD didn't move anywhere with 0 days left, your at the money 240 put is going to be worth $1.40 per contract. That's what it is. That's the intrinsic value. Okay. So you can sell it out for $1.40. You paid $27 per contract for it. And now it's only worth $1.40 per contract. So you're going to lose a lot of money with that AMD at the money because the stock price didn't go anywhere. With the 370 put on expiration day, that thing's worth $131 per contract. So you're actually only losing a very small amount of money with the deep in the money strikes. You bought it for 133 and change, it's worth 131 and change. So you're only losing a very small amount. Now, if AMD did fall down to 180 like we thought, or like you hope, now the 370 puts worth 190 intrinsically. You have to subtract out the 133 that you paid for it, and the net is like the $5,600. And for the 240 strike, it's worth $60 intrinsically. There's the difference right there. Subtract out the 27 and change from it, you're making, $32 per contract times 5. So that's where your big money comes from. Is if the stock really goes down hard, you're going to make a lot more money with the at the money options. So it's you have to decide, is it worth me paying a lot for the deep in the money and know that my break even is very easy to get to and has a high probability of doing that? Or is it worth you buying a number, in this case 5 of the at the monies, and really hoping that the stock goes down good? Okay, because you got more hope in this scenario. Now, the other thing I want people to ask me about all the time is, let's talk about theta, because people are always asking about, don't you lose money to theta with in the money options? And the answer to that is mostly no. Okay, deep in the money strikes have very little time decay, very little theta, compared to at the money strikes that have a very high theta. Theta is how much money you will lose as the option moves towards expiration on a daily basis. So we're looking at the Jan expiration. These 240 puts in the theta column, you're losing 13.6 cents per day. So tomorrow this thing will be worth 13.6 cents cheaper. It doesn't matter what the stock does. The option is going to decay by 13.6 cents per day, where the deep in the money is only going to decay about 5.6 cents a day. It's almost 3 times larger for the at the monies. So people ask me that. So these deep in the money strikes don't have a lot of theta decay. Now, the closer you get to expiration, let's go move up by 2 months. The 240 strike now is decaying by 26.4 cents a day. 26.4 cents a day. This thing's going to lose 26.4 cents per contract just overnight. If you're the buyer of that thing, tomorrow you're 26.4 cents poorer. And the 370 put has only a 6 cent per day decay, much lower than the 26 cents. Okay, so that's another great thing about buying deep in the money, high delta options, is that your theta decay is very small. People don't seem to understand that. All right, so there you go. There's the lesson on, if you're bearish and you want to buy deep in the money puts, you can certainly do that. We had a lot of people asking about that. The other video I made last time is on buying deep in the money calls. I'm going to put that on the screen as well in case you want to look at that. If you're very bullish on the market, consider buying deep in the money call options instead of buying shares of stock. All right, that's it. I hope this has been helpful. Again, please give me a thumbs up, give me a like, leave me a comment, send me your questions. If you go through these comments, you see that I'm answering all these questions. I take time out of my day to make these free videos to answer all your questions. I'm here to help everybody. Please help me reach my goal, my next goal of 50,000 subscribers on this channel. I want to make these videos reach everybody. So help me do that. Send me an email. I will answer your emails. Let me just show you what we have here on our website, smartoptionseller.com. We got a couple things under our services tab. Let me get out of this first. Hang on for a second. That probability calculator that you see, you can get that. That's one of our services. You can get the probability calculator. We have 2 newsletters that we run. We have our coaching sessions if you need to get help, on your way in options trading. We have our Warren Buffett ebook, which is all about the deep in the money call option buying strategy. Take a look at this thing. We have our video series if you want to take a deep dive into selling put options, because that's what we specialize in here. And you can also get our free ebook, Put Selling Basics. Got lots of stuff for you guys to look at. I'll put lots of other links down below. Please remember to read in the description below. Got links for books and websites and software and all those good things. Spend some time. Got the video on the screen here. All right, that's it. I know it's been about a half hour. Hope it's been helpful. This is Lee Lowell. I'll see everyone in the next one.